Hello. So you're looking to get a rental property for investment. Should you get a low cost property or a high end, more expensive property in an upmarket area? Obviously, a lot will depend on your budget. But assuming that this was not an issue, which is better for rental yield and capital growth? Hi, everyone. I'm Dr. Tariq or Dr. T, and I've been in the property business for almost 50 years. Here's a bit about me. In the 1980s, whilst working as a junior doctor, my hobby was computers, and I co-founded one of the UK's largest PC manufacturers with over 3,000 staff and brands such as Tiny, Opus, and Time Computers. Computer manufacturing moved to China by early 2000s, and during the past 17 years, I've researched and analysed the UK property market and developed a property business for 100% passive investors that is different to traditional agents and property companies. My children and over 100 staff now run this business, but I still help out with strategy, marketing, and client advice. We've appeared on the BBC's main property show over 7 times, bought, renovated, rented out, and resold almost 3,000 low cost houses, and we continue to look after these for our investor clients. I'm now retired from my part time NHS work, but I really enjoy helping people with property investment and making videos like this. Before we dive in, if you find today's information useful, please hit the like button. Drop a comment below letting me know what you'd like us to cover next. And make sure you subscribe and hit the bell so you don't miss future property tips. It really helps the channel and spreads the word. Let's get back to the video now. Now, low-cost freehold houses that are in good condition and in reasonable areas can be purchased for around £80,000 to £130,000. You can get large two-bed houses for rental for under £90,000, and these deliver gross rent of around £8,000 per year. On the other hand, you can get a large detached house or premium city centre apartment for around £360,000, and these will deliver double the rent of around £16,000. But these are 4 times more expensive than the £90,000 houses. So for the same cost of one of these premium houses or apartments, you could buy 4 low-cost houses, giving in total a much higher gross rent of around £32,000 per year. Now, one advantage of more expensive property is that the cost of the tenancy and property maintenance are lower. The tenant is likely to be a professional tenant and always pays the rent, and you only have one property to maintain and not 4. But overall, the total net rent you get is still better on lower cost property, being on average 80% more for 4 low cost houses than one expensive house of the same total value. So for rental income, lower cost houses are much better. Let's talk about capital growth. Now, many people think that capital growth is higher on more expensive properties, but this is not true. The growth per property is higher as the houses are more expensive, but percentage capital growth is actually very similar over the very long term. If you haven't subscribed yet, now's a good time. We publish content every week on UK property investing. Hit the bell and like. It really helps the channel and ensures you're notified when the next video is released. Historical data on house prices over the past 70 years shows that houses, on average, have doubled in value every 12 to 13 years, and the average annual increase has been around 7% per year on almost all types of houses, low cost or high end, smaller or larger, and in all areas, north and south. This is surprising, but it's true for the average growth over the long term. But growth may happen in spurts, and demand for certain categories of houses in some areas may grow at a faster rate than others over a shorter period of time. For example, more expensive mid-range houses with gardens grew better than others for the 3-year period during and after COVID. Now you can see this sort of trend historically, but predicting with any certainty or which type of houses or which areas are going to grow better in the future is difficult. Many experts think that in the future the percentage capital growth in the next 10 to 20 years is likely to be higher on lower cost houses, as this is where demand is increasing the most as families get smaller. So for both rental yield and capital growth, it makes sense to buy multiple lower cost properties than one more expensive property. Cheaper properties also allow you to build your portfolio gradually over time in a stepwise manner. You end up with multiple houses, so your risk is lower as all the eggs are not in one basket. Multiple smaller houses give you more flexibility in that you can sell one house and keep the others if you need some funds. They're also more tax efficient as you can sell one property at a time and keep your capital gain in each tax year within the lower tax limits. Now, new tax changes from the Labour government may also make it more expensive to buy and own high-cost houses, especially those over £500,000. This is likely to increase the demand for lower-cost houses in the future. So lower cost is better for investment. And if you're looking to buy a good, fully renovated two-bed rental house, you should not be looking to pay more than £90,000, including all the costs. Please comment below and let me know what you think. Thanks for watching. And now here's a message from our sponsor.
If you want to invest in property and get 7% net rent, long-term capital growth, no costs or liabilities ever, do nothing yourself, and be living anywhere in the world, then consider Find UK Property. They provide 100% passive investment solutions for long-term income from freehold properties starting at under 80k. You get a property that is affordable, fully renovated, already rented out, contractually guaranteed and productive from day one. You become the owner and rent it back to Find UK Property so that they become your tenants and look after all aspects of the property in a fully compliant way. You never need to deal with tenants, estate agents, or do any property maintenance or repairs, or pay for any costs. Find UK Property look after over 2,500 houses, all of which are sublet to their own tenants. And on average, they get more rent from their tenants than they have to pay the property owners. So that way they can cover all the property costs. Their solutions are great for those wanting to retire on pension-type income or gradually build large property portfolios passively in a tax-efficient manner. Please visit the website at findukproperty.com and speak to a consultant today.